You get this deduction for yourself, for your spouse, and for your dependents. Now see here, I want you to recall what you did in module 1. Who can be your dependent? Either a child who races in your house, or a dependent relative or a relative who ports us, isn't it? So you remember all those provisions. How many people are totally blank? I'm speaking Greek and Latin. How many people? Do you remember now what I'm saying? A child who races in your house, or a relative who port us. You remember that? How many people remember? Module 1? Yeah. See, that's the reason I want you to be completely at par with me. Because if I relate to something, now see, you guys have gone blank again. If you don't understand what I'm speaking, that means you've not revised whatever you've done in the past. And it will be very difficult to elevate your level if you're not at par with what I'm teaching. So when I'm saying at par, it means everything that has been taught earlier, it should be there in your mind. You don't have to refer to it. So when you look at those provisions, the P, the O, the R, the T, the U, and the S, there are 2 provisions that needs to be there if you want to claim somebody as a dependent who is not a child, who is a relative. Out of those 6 requirements, 2 of them needn't be met. If I want to claim somebody's expenses, claim somebody, give me 1 second, guys. Okay. So 2 of the provisions that you generally want for a person to be qualified as a dependent on a return needn't be met in case if I want to claim the medical expenses of that person. So 2 of the conditions was first, you remember the U, under a particular amount of taxable income. Hey guys, do you recall what I'm saying? Manali, do you remember? No. Ashwin, you finished all the modules MCQs till now, right? Is it resonating with you? Unmute fast. Fast, guys. Ashwin, unmute. Do you recall what I'm saying? Yes, no.
Partly I can recall.
Sorry?
Partly I can recall.
No, then you're not doing a good job, Ashwin. Then I told you categorically that it's been about a month that you guys joined me. You have to catch up completely. You have to keep revising. You have to. Otherwise, there's no point. You will not be able to qualify for this paper. I'm telling you beforehand. If you are not, if I'm asking you a provision that is related to first class, and if you can partly recall it, or if you can't recall it, that means you've not done a job properly. So I'm alerting you, you will not be able to sit for the exam on time. Please start studying. If you don't see nobody, whatever I do, if you don't study, nobody can help you clear the exam. So 2 of the provisions in which it is a requirement that you have to have less than a minimum number of amount, and P is that you cannot file your separate return. So what we're trying to say is, let's say there is a person who has a mother who's aging, and that mother has a huge amount of passive income. Let's say a mother has a lot of, what do you say? Let's say mutual funds, or let's say fixed deposits, which is earning her interest. So general rule, if you go to the dependency provisions, they will tell you that if the taxable income is more than $4,400, you cannot claim that person as a dependent on your return. But let's assume there is a mother like that you have who's filing her own return because she has a lot of taxable income, and hence you cannot claim her as a dependent on your return. Even for that person, you can claim the medical expenses paid as a deduction in Schedule A. Okay, so that's the first thing. The requirement of U and P needn't be met. And the second is the child of divorced parent is treated as a dependent of both the parents. So if there is a child of a divorced parent, and later on you will study about who can claim that person as a dependent on his or her return. So irrespective of who is claiming, if anybody is paying for the medical expenses of the child, you can claim the deduction on that count. When are you allowed this deduction? The amount has to be both paid and incurred. That means it has to be related to this year and you would have actually paid it. You can pay by cash, you can pay by credit card. For credit card, if you're swiping the credit card, that means the payment is made, not when the credit card bill is presented for payment and you pay it. Okay. So for whom taxpayer, spouse, and dependents need not fulfill the U and the P criteria, and the child can be claimed as a dependent on both the returns. When allowed, when you are paying and you're incurring the expense, and that is your expense. You've not been compensated by the insurance company for this expense. How much? Now, this is important, start this. This is where I was telling you that the concept of an excess figure will come to your mind. The amount must be in excess of 7.5% of AGI. What amount? The qualified medical expenses. How do you calculate it? You take all your expenses, you reduce it by insurance reimbursement because this is the amount that you did not have to pay. And whatever is the excess that you have paid, take something which crosses the 7.5% threshold. That balance becomes deductible medical expenses. So what we're going to do is, guys, I will see. I don't promise, but I will genuinely try. I can reduce all the questions, all the provisions like this. We'll understand the provision. Then I'll tell you the type of questions that are asked, and then we'll solve the questions one after the other. Okay. So for whom do you get the medical expense? Yourself, spouse, and dependent. U and P need not be met. Child can be claimed as a dependent and both the parents return. When are you going to allow it? When you either pay, when you have to pay, and the expense must be related to the same year. How much? Take your full expenses, reduce it by insurance reimbursement, whatever is the amount, see how much of it is in excess of 7.5% of AGI. That becomes your valid deductible medical expenses. So this is very, very important, guys. What is allowed as a deduction and what is not allowed as a deduction. And out of the two, this is more important than the first. Okay. So what is allowed? Any amount that has been prescribed by the doctor, prescribed medicines, prescribed drugs. Now, see, in the US, anyways, it's not easy to get drugs. Like in India, we can speak over the phone, we can know the medicine, and we can just go to a chemist and get those medicines. In the US, that's not possible. Okay, so prescribed medicines from the doctor. Any medical or accident insurance that you're paying, that amount is allowed as a deduction. Please remember, require surgery, not elective surgery. So somebody who is a Hollywood star and he or she undergoes a Botox treatment or, kind of a nose job or a lips job, whatever, that's not allowed as a deduction. But if somebody met with a road accident and the plastic surgery was a necessity for the recuperation, then that is a required surgery and the amount will be eligible for deduction where Schedule A. Physical disability cost, okay? And this is important, start this. Transportation to the medical facility. Ideally, if they give you the actuals, you can take it. Or if you don't know the actuals, you can just take a ballpark figure of 0.18 per mile from Jan to June, and then 0.22 per mile from July to December. We did this even when we were doing the gross income, if you remember, right? Or the business deduction, either of the two. Now, cost of in-house hospital care. That means if you're staying in the hospital, so if I'm in the hospital to take care of my dad and we had meals and lodgings there, then all of that cost will be covered. Eyeglasses, contact lenses. Okay, please understand this is allowed in the US. Guide dog. You're blind and you need a guide dog, that will be allowed. Air conditioning. Capital improvements for medical care. Now, this is very, very important. Start this. You will have to have, so you're growing old or you met with an accident and now you need a wheelchair, and that wheelchair has to have a ramp because your house was not wheelchair friendly. So you've got to make a lot of railings, you've got to make ramps, and for that you have to incur expense. Can it be allowed as a deduction? Yes, but there are exceptions that we are going to relate here. Okay, expenditures for lodging. If you're not staying in the hospital, but if you're staying outside. For instance, let's say there is a medical treatment that somebody has to undergo. The son goes with the father is hospitalized, the son does not want to take a room which is having an independent assistant, allowed to stay there. So the son rents a house which is very nearby and pays the amount every day. So they say it's 50 per night per individual. Please remember. So if mom and child are going together and if both decide, so let's say there's a cancer treatment going on which does not require hospitalization, but it is not in your hometown, you have to go out and you rent a place till $50 per night per individual will be allowed as a deduction. Premium pays for membership in an association that gives cooperative medical service. So you participated in a premium in a kind of a cooperative, and if there's any medical need, you will get a subsidized rate. If you pay the premium, that can be taken as a deduction. Extra cost of Part B Medicare. Medical expenses of deceased is allowed. So it's either you go to the estate tax return or you go to the 1040 return of the deceased. Now we have done the IRD, if you remember. How many people remember? What is the full form of IRD? What is the full form of IRD? We've done this in the earlier sessions. What is the full form of IRD? How many people remember? What? Income. Yeah. Income. IRD, guys. Ashwin, I'm very unhappy. Something is not moving well. If you're doing the questions and if you're not recalling these basics, then there's something which is missing. Okay. Income in respect of decedent. Somebody who's died. We've done this in gross income. Somebody who's died. See, you have to bring the entire tax on your fingertips. So whatever you're doing, there should be a visual memory. You may forget the things which are there, but more or less you should be able to tie up the entire thing in your mind. If that's not happening, then you will struggle in your exams. Okay. So if somebody is dying, we know that the year of death, you have to file the form 1040 of that person. If there is any amount that person earned but could not book as a income in his return because he received this later and he was a cash basis taxpayer, then that amount goes to whoever is receiving that figure. If it is another person, that is income in respect of decedent, and that person will put it in his or her income tax return under the section IRD income. Or if it is the estate, then the estate will be taxed. Similarly, if there are some expenses which are, so imagine a person was hospitalized and the hospitalization went for 5 days, 6 days, 10 days. Because of COVID cases, the complexity increased, a person died. Now the payments were all made, right? When the payments were made, who can claim that as a deduction? Either the form 1040 final return or the estate, but not both, remember. And medical expenses of the adopted child. All of this can be allowed as a deduction. And this is very important. What is not allowed as a deduction? You will not be allowed any deduction for household help. Somebody is sick, but you need a house help. No. Elective surgeries, I've already told you. Life insurance. See, medical is for medical needs. They say life insurance is for a financial need. It is not a medical need. So they don't get you any kind of a deduction for a premium paid for life insurance. Okay, now this is important, star this. Capital expenditures up to the increase in fair market value of the property. Even if there's any amount which is disallowed, the cost of operating or maintaining that property would be deducted. Now, what do you mean by that? I have two questions on this. We'll do it. What it means is, let's say I told you the person met with an accident, that person came home in a wheelchair, and the house had to be renovated. Why? Because there were no ramps, there were no railings, and the house had to be wheelchair friendly. Now, let's assume that the value of the house just before the accident was $200,000. And after the accident, when you made all of those ramp, see, when you make all of those ramp, definitely the valuation of the house also increases, right? I put an elevator because the wheelchair has to go up. You cannot take it to the stairs. I put a ramp. So the value of the house also goes up. The IRS is very clear. Whatever amount you spend, let's say you spend $70,000 renovating the house. And once you've paid the 70, you realize that now if you sell the house, you will sell it for $250,000. How do you do that? You get independent appraisers value your property. So they say, see, ideally you spend 70, but you will be able to recover this 50 only by selling the house, right? So your property value also increased. So net, I will give you a medical expense reduction for $20,000. That is what is meant by capital improvements for medical care, but not till the figure which is increase the medical expenses, the fair market value of the property. One more thing, what they're saying is, see, now that property is worth 250. Now you have to pay for the maintenance of the property, the maintenance the way you were paying earlier, right? So when I'm paying for the maintenance, I don't want you to segregate it between 2 and 250. Whatever maintenance you are paying, I will let you take the full deduction for the maintenance. I'm not going to restrict that fee. Okay. Then you have these health club. Okay, somebody is very fat in the US. You have these wealth, weight loss institutions. So you can tell your childhood obesity is a big problem there. So let's say you've sent your child to these weight loss institutes. Can you claim that expense? The answer is no. Health club, weight loss, even if it is prescribed by doctor, it's a personal expense, not be allowed as a deduction. Personal hygiene does not matter how much you're spending. If it is for a hygiene, any kind of a cosmetic product or a body, whatever it is, a face product, not be allowed as a deduction. Any meals that you not take in the factory, in the hotel, hospital premises, but if you take it outside, will not be allowed as a deduction. And Medicare Part A, not be allowed as a deduction. This is an exhaustive list, but I genuinely hope that this will help you. So the first kind of question that can be asked in this area is what is deductible, what is not deductible. We'll do this, just hang on. Okay, there's something also called a multiple support agreement. What is a multiple support agreement? See, let's say there is a mom and that mom is single. That means is a divorcee. Now she's a widow. Oh, sorry, let's say she's a widow now. And then mom has 3 children. So son 1, daughter, and another daughter. So the first, the second, the third. Now see, each of them, and let's say the mom is very sick and mom is staying in a nursing home. Now, what is happening is none of them can bear the full support expenses for the mom. So what they decide? They decide to split it 1/3, 1/3, 1/3. So let's say the amount of the bill was $3,000. So S pays 1,000, D pays 1,000, and then other daughter pays 1,000. The question is, who will get this expense deduction in their income tax return? The answer is there has to be a form for multiple support agreement that has to be signed. So in a year, only one person can claim the deduction. Okay. How do you do that? We say, okay, every year they have to submit, additional supportings by which, let's say S is paying 3,000 and getting reimbursed 2,000 from the 2 daughters, isn't it? So they can take rounds. First year S will pay and the balance 2 will reimburse them. Next year daughter 1 will pay, and then so every year person who's paying the full amount is getting reimbursed for the share that does not belong to that person. So there is some paperwork that needs to be done. Once that paperwork is done, each one of them can get the required deduction on their return. We'll see how it works. I'll give you a question on this. But there are 3 most important requirements for this provision to apply. First is each of them has to provide at least 10% support. So none of them can pay less than $300. That's number 1. None can provide more than 50% support. The moment somebody is providing more than 50% support, the full amount can be claimed as a deduction only by that person. So each has to provide at least 10. None can provide more than 50. And people have to split the expense between themselves. Okay, so we'll do a question on this. In fact, we'll do a series of questions on this to understand. So what are we doing? We're doing itemized deduction. Where does it come? Schedule A. What are the provisions? 2 CMs for ITO. So CCMMITO. Out of this, 1 M is scrapped. The other M is medical expenses. What are we knowing? Medical expenses, take a qualified medical expense, reduce it by insurance reimbursement, get the balance in excess of 7.5% of AGI allowed as a deduction. What is allowed, what is disallowed, and what are multiple support agreements. That's it. Now let's just crack the questions from this area. Question 1. Okay. Okay, I want you guys to, okay, first couple of questions I'll give you. So there are generally 4 types of questions that are asked in this area. The first type is when they tell you what is deductible, what is not deductible, right? So they've given you a big dhobi list of things here, and they ask you how much is allowed as a deduction. Take the first question. A is a cash basis taxpayer. During the year, he paid the following medical expenses for himself and his daughter Joshua, whom he claims as a dependent on his tax return. 310 for glasses. Oh, sorry. One thing, guys. Okay. So, how much? 310 for glasses. That will be allowed as a deduction. 290 for himself. Both of them. Dental root canal allowed as a deduction. Hospital emergency services, out of which 700 was paid by the insurance company in the same year. That means you will reduce it by insurance reimbursement, it becomes 200. 1250 for Joshua's braces, which he charged to his credit card in December and paid in January of the next year. So it was charged to the credit card this year, you will get the full reduction this year itself. Prescriptions for allergies, you will get that as a deduction. Cosmetic plastic surgery, not allowed as a deduction. Just add up and tell me what is the figure. Just add up and tell me what is the figure. What's the answer, guys? Are you doing it? Sorry?
3,200.
That's the answer. Is it clear? What is allowed? What is not allowed? Is this clear? Okay. Look for the second question now. Okay? The question is asking you, what is Derek's medical expense? Derek flew to Chicago for surgery. He incurred the following costs in connection with the trip. Out of which you have to tell me what is his qualified medical expense. So the round trip, the transportation is allowed as a deduction. Lodging, what was the provision? It was 50 per night per individual. So one individual for 2 nights, it becomes 100. Restaurant meals not allowed as a deduction. Only the hospital meals are allowed as a deduction. And hospital and surgeon, 5,000. So total 5,450 will be allowed as a deduction. Is that clear? Answer is D for question 2, 5,450. So the first type is all about, they'll give you the dhobi list and they'll ask you, okay, what is deductible, what is not deductible. Then they can test you for the formula. They can ask you, okay, this is a situation. Tell me what is the actual amount of the medical expense. And here you will have these qualified medical expenses minus insurance reimbursement, the amount that is paid less 7.5% of AGI, that becomes your deduction. Is this clear? So let's take a question on that. The call of the question is, what is the amount that the gear would be able to deduct as an itemized deduction on their tax return after any limitation? That means the net figure. During the year, the Gear family incurred the following medical expenses. The AGI was 60. That means I know that whatever is the figure, I have to take it only in excess of 7.5% of $60,000. And there's an insurance reimbursement of 1,000 for their 2022 expenses. So what is an allowable? So what was the formula? We had qualified medical expenses. How much? 2,400 will be allowed. Medicine will be allowed. Health club will not be allowed. Medical insurance will be allowed. So 2,400, 900, 3,200. How much is it? How much is it? Write in the chat panel fast. So this looks like 6,500, right? So out of this 6,500, the insurance paid you how much? The insurance reimbursed you 1,000. So qualified medical expenses paid. How much? $5,500. Can I take the full amount? The answer is no. You have to deduct 7.5% of AGI, which is $60,000, which is how much? Which is how much? You guys are not answering on time. So which is, oh, sorry.
4,500.
4,500, right? Sorry. So what is the maximum deduction that can be allowed? $1,000. Is this clear? So the answer will become, sorry. Oh, this was a second sum, I think. The answer is D, $1,000. Is this clear? Any questions? Both of you, is this clear?
Yes, ma'am.
I don't think they're going to keep it tougher than this, guys, okay? See, the call of the question is, what is her medical deduction for Schedule A? Okay? Mrs. Eleanor, a single 35-year-old taxpayer, had an adjusted gross income of 60 for the current year. In addition, she paid the following. So I know that whatever is the amount, it has to be in excess of 0.075 of 60, which we calculated in the last example, which was 4,500, right? So what I'll do, surgeon's fees, yes. Psychiatrist's fees, yes. Medical services, yes. Meals in hospitals, yes. Hospital room charge, yes. To and from the doctor's office in hospital, yes. Contact lenses, yes. Prescribed drugs, yes. Vitamins for general health, no. Weight loss program, no. Chiropractor's fee, yes. How much is it? Quickly add up and tell me. How much is allowed? Okay. She also paid 900 for medical insurance premium. That means out of this, you will also add 900 because that is added. And she received an insurance reimbursement of $6,000. Whatever is the figure, you will reduce 4,500 from this again to give you the medical expense reduction. What is it? Just add up and tell me. So this is 6. How much is it?
18,330.
18,330.
18,330.
So we start with 18,330. This includes 900, right?
Yes, ma'am.
So it's 12,330. Reduce 4,500 from 12,330, it will be some 8,190. That's the answer. Oh no, sorry. How much is it? Some 830 has to be there, 30 has to be there, right? So it is 7,830. Is this clear? So what is allowed, what is not allowed, how to compute? Any questions on this? Anybody? Okay. Now look at this question. They're asking you, what is a medical expense deduction before any limitations? Asif is a cash basis taxpayer. During the year, he incurred the following expenses for himself and his daughter Mariana, whom he claims as a dependent on his return. Braces, allowed. Chiropractor, allowed. Emergency room services, allowed. Insurance, not allowed. He paid the remaining 25 in the next year. That means he admitted her daughter to the hospital under emergency. He paid 25, but not in the same year. In the next year. Okay, 1 second. It is not chiropractor's fees, guys. I forgot. It is a babysitting, so he could visit a chiropractor. If it is for the chiropractor, you are allowed. Who's a chiropractor? If you get a dislocation anywhere, na, these are the people who correct it. Okay. So since it's babysitting and not the chiropractor, it will be disallowed. Now we know that the payment has to happen in the same year if you want to take a deduction. The clause is it has to be paid and incurred. Since it was not paid this year, you will not get it as a deduction this year, you will get it as a deduction next year. So what is the figure? It is $800. Is it clear? See, this is the third kind. You remember we spoke about the capital improvements. So they'll give you questions on which they'll give you capital improvements, and then they will ask you to find out what is the amount it will be claimed as a deduction in Schedule A. See, Mr. B broke his hip and must now use a wheelchair. He modified his home to accommodate the wheelchair. He had his home appraised for refinancing just before the improvements to his house. The value of his home was 2, and after he made the modifications, the value went up to 202. That means whatever is the expense, it has to be reduced by 2. Bond incurred the following expenses during the year. Without consideration of AGI, compute the amount that he can claim as a deduction for medical expense on Schedule A of Form 1040. $3,000 to construct a ramp, allowed as a deduction. $4,000 for installation of a lift to transport the wheelchair from the first to the second floor, allowed. $1,000 for adding a handrails around his tub, and 200 repairs to his chimney. That will not be allowed because that is not a capital improvement relating to the medical needs. So out of 8,000, 2,000 will be disallowed and 6,000 will be allowed to him. The answer becomes 6. Is it clear? Is it clear?
Yes.
If that is clear, give me the answer for this. Oh, I think I just mistook this. Sorry. Oh, 1 second. This was 6. Huh? This is an extra one. 1 second, guys. Yeah. Give me the answer for this quickly. Let's see who gives me the answer for this correctly. Question 7. Give me the answer for this. Question number 7. What's the answer?
Answer is B, 5,000.
Who is this?
Roji.
Yeah, Roji, explain.
First, 7,000 has to be added and 1,000 has to be added. Then 3,000 has to be reduced. So, answer
Yeah,
will be
because see, I don't care whether this 3,000 is disallowed. If I pay for the maintenance, it has to be on both. Okay. Now we have some questions on multiple support agreements, the third concept that we spoke about. See, without regard to AGI limitations, compute Jill's medical expense deduction for the year 2022. Jill divorced her husband James in Jill divorced her husband James in 2021. Their son Harry lived with Jill for all of 2022 and qualified as her dependent. So, Jill and James. So, this is the husband, this is the wife. They had a son, which was Edge, who was staying with the wife. However, the divorce decree indicates that James can take the dependency deduction. Even though the dependency exemption is not claimed by J, it is taken by the husband. J paid $1,200 in medical expenses for Harry, and James paid $2,000. Jill entered into a multiple support agreement with her 3 brothers to assist with her mother's care and claim the deduction. Jill provided 1/4 of her mother's support and paid 1/4 of the medical expenses for the mother, which was her quota share. Without regard to the AGI, what is the deduction that she can claim? So she can claim full 2,700. So here 2 things comes across. First, the child can be claimed as a deduction in both their returns. Whoever is paid for the medical expenses, you can get that as a deduction. And whatever amount the person pays under multiple support agreement, that can be claimed as a deduction. So total 2,700 will be allowed as a deduction. Is that clear? The last question in this, okay? See if you can answer this. What is the amount J can consider as part of medical expenses in the preparation of her individual tax return? J and her 3 sisters each provided 1/3 of their mother's total support. Under a multiple support agreement, J is allowed to claim her mother as a dependent for the current year. So this is the example that I gave you. So J, sister 2, sister 3. Each one of them are giving 1/3 support. This year, it is J's turn to pay and claim her mother as a dependent on her return. The total amount comes to 6,000. She paid full 6,000 and then she received 2,000 from sister 2 and 2,000 from sister 3. That means net she paid her share only, which is 2,000. What is the amount J can consider as part of medical expenses in the preparation of her income tax return? So in her Schedule A, she can claim only 2,000 that she had net paid for her mother.